Chairman and my colleagues. I am Senator Titus Zam. I represent Benue Northwest.
The CG and your team. My name is Azanwa Onyewuchi, and I represent Imo East Senatorial.
I remain Senator Calvin Chukwu. I represent Enugu East, member of this committee.
Senator Emma Nwachukwu. I represent Anambra South.
Colleagues, Honorable Controller General of the Customs Service and your team,
members of the committee, the CG Customs Secretariat, and members of the CG Centrage, I remain Sharafaddin Abiodun Ali, the Vice Chairman of this committee. Thank you.
The Vice Chairman, very distinguished colleagues, the CG of Customs.
My name is Bashir Adewale Adeniyi. I'm the Controller General of Customs, and I'm leading the DCG Abe in charge of Human Resource HRD. He's from Katsina State, Kaduna.
Appreciating my colleagues, okay, for taking our time to be here today. As a matter of fact, we are still on recess. We are still very much on recess. I think we are resuming tomorrow, but they made this sacrifice to be here today. So my colleagues, Chairman, and my other distinguished colleagues, I want to thank you very much for being here today. Having said that, I want to appreciate the President of the Federal Republic of Nigeria for the recent extension of service granted to the CG of Customs. The CG of Customs, upon assumption of duty, I think sometimes June 2023, embarked on various reforms. Those reforms today have manifested in improved revenues, improved anti-smuggling exercises, improved trade facilitations. And the President deemed it fit to allow him to stay on for another period of 6 months to consolidate those gains. I want to thank the President for giving him this opportunity. I believe that within the next 6 months, he would have perfectly consolidated these reforms that will now set the Nigerian Customs Services on a sustainable path for growth. Talking about revenue generation, as you are all aware, the President of Nigeria has embarked on various infrastructural developments. These infrastructures are supposed to facilitate ease of doing business in Nigeria and provide succor to virtually all Nigerians. And customs services is one of the major drivers of revenue generations in this country. That puts customs constantly under pressure. So the CG and members of his team, I want to employ you to work harder in 2026 to actualize your budget dreams that I'm seeing here, which I will consider ambitious. On that note, I want to call on the CG to make his presentation of the budget. You are welcome.
Thank you very much, Chair. You have used to describe our performance and the appreciation of Mr. President for the extension of my service. I also want to in appreciation of the sacrifice which members have made, giving up their recess period budget. We really appreciate you, and we do not take this for granted. We have always relied on the support, the guidance that we have received from this distinguished committee, and we believe that moving forward, our relationship will continue to be guided by those principles, recognizing that our oversight comes from this hallowed chamber. In terms of the business of the day, permit me to start with a review of the 2025 approved budget performance. In the budget documents that we had for 2025, our targets given to us under the, which was approved by the National Assembly last year, was 6.584 trillion naira. 6.584 trillion naira. And during this period, from January to December 2025, we generated a total of 7.27 trillion naira. 7.277 trillion naira. Let me just correct, in case the document you have is the executive copy, the figure that we have in the main document is the correct figure of 7.277 trillion naira. And when we compare this to the targets, it is a positive variance of 674.10 billion naira, and it's 10.24% over what was projected in 2025. But you know, it was not just a very smooth sail for us, because there were a number of factors that militated against us. Definitely, we may have done better than this. I just talked about some few of them. In last year, the excise duty on telecommunication service, the revenue that was expected from this was still not collected, because that particular fiscal policy remained suspended. We were not able to implement that, and we estimate that 3.43% of our performance was negatively affected by that. The same goes for the green tax, which was proposed in 2023, and this was meant to also improve our revenue. However, this has not been implemented until we got the revised fiscal policy in April this year that reintroduced it and directed us to start implementation by the 1st of July. The federal government undertook a number of initiatives to cushion the effect of some economic policies that were embarked upon by the federal government of Nigeria. If you remember that upon assumption of office, President Bola Ahmed Tinubu introduced the removal of subsidy. And to cushion the effect of this, particularly on public transportation, initiatives on compressed natural gas, CNG, and electric vehicles were made, and tariff on those items were removed completely. They were at 0%. So throughout the year, there was no duty on that. There was also another presidential initiative on healthcare delivery, trying to make healthcare delivery more accessible to Nigerians. So manufactured inputs, raw materials, essential raw materials, capital machineries were all removed from duty collection in furtherance of the implementation of this particular item. IDEC also constitutes a very huge dent on our revenue profile. The import duty exemption certificates for 2025 amounted to a total of 34.538 trillion worth of imports. This comprises of petroleum products, which accounts for 56.40%, military accoutrements, military hardware, which accounts for 40.52%, and other items, other miscellaneous items, which accounts for 3.08%. These are all policies, measures that led to our revenue remaining at the level at which it was. And of course, finally, we also have accessible products in Schedule 5 of our Common External Tariff. Only 4 out of 11 were brought into excise control. So we were collecting excise duty on only 4 of the 11 products, according to our fiscal policy. As we also know, the Russian-Ukraine war which took part of 2025, affected our revenue profile because, importation of some bulk items, particularly wheat, from that particular region was put on hold, and so we were not able to generate revenue that we could have had. So these are some of the factors that worked against revenue last year. For 2025, the approved budget from National Assembly, MTF, is 1.132 trillion naira, and out of which, in terms of the performance of the expenditure, out of the 1.132 trillion for 2025 budget year, we were able to get only 808.86 billion, representing 71.42. So this was the actual receipts. So what we projected from the budget was 1.132 trillion, but what we got in actual receipts was 808.86 billion, representing 71.46%. And in 2025, this is the way this was expended. On personnel cost, so this was the way in which it was expended. On personnel cost, we expended 116.78 billion, 125.20 billion for overhead costs, 143.62 billion for capital, 205.54 billion for concessionaire fees, making a total of 591.14 billion. And now let's move to the proposals for 2026. Our approved budgets based on MTF approved by the National Assembly. Our revenue targets under the 2026 financial year is 11.074 trillion. And out of this 11.074 trillion, we expect 5.542 trillion projected for the federation accounts, 1.491 trillion for non-federation accounts, 2.773 trillion for import VAT, and 1.266 trillion expected from the 4% FOB cost of collection. Now let's move to paragraph 3.2, the objective, the strategies, and some of the assumptions that are underlining the budget for 2026. The first is the fact that our technology platform, the Unified Customs Information System, UCIS, which we indigenously call Bodogu, is now well up and running, and it represents an automated platform that enables us to harness all customs procedures. We had initial teething problem with the implementation of this particular system, but now all the teething problems have been put to rest, and this system is now functioning very well in all seaports, airports, and border stations. We are also undertaking a number of revenue recovery interventions from our headquarters through the system audits and through the modernized post-clearance audits, which has received capacity building training for our international partners at the World Bank, IMF, and the World Customs Organization. I'm happy that Mr. Chairman talked about some trade facilitation measures which we have embarked upon. We have discovered that we can, through trade facilitation, increase the rate of turnover and allow companies that were doing 50% to now operate at more optimal level. And so through the Authorized Economic Operator Program and the Advanced Ruling Program, we have seen that we have boosted revenue drive. We have improved the time it takes for goods to be released from reports. We have improved the turnover time of import and exports, and this has led to increased revenue generation as well. But this gladdens our heart that we are not the only one talking about these improvements. Just last week, the Presidential Enabling Business Council, PEBEC, released their mid-year report for 2026, and they rated Nigeria Customs Service as the most improved government agencies in terms of trade facilitation and ease of doing business. For our anti-smuggling, we continue to make seizures, and we are now using intelligence-driven and technology-driven measures like geospatial intelligence and the use of joint patrol to more effectively man our borders. We are also using stakeholder collaboration because we are engaging with the private sector, both within and outside the country, to ensure that we achieve the objective of trade facilitation. We have three major assumptions that we believe that may affect revenue, some positively, some negatively. In 2026 fiscal policy measures, there is a new excise tariff regime which was conveyed to us in the policy measures, and we believe that this increase would help us to boost revenue from excise. However, the same policy document has also reduced the tariff on motor vehicles, different kind of motor vehicles. Both the customs duty and the levy on motor vehicles have been reduced as a kind of reaction to outcry by the Nigerian populace. And Mr. President has been kind enough to ask us to reduce the duty by as much as 15%. However, we also believe that as we are going out of the very serious effect of the Russian-Ukraine war, in 2026 we landed in something which is even more fundamental, the Iran-US crisis in the Strait of Hormuz that has really affected the supply chain. Through this, the supply chain integrity has been affected, and it has reduced the throughput of cargo that is coming into the country. So these are some of the basic assumptions which we believe will guide the performance of the budget and revenue in 2026. In terms of the expected income, we are proposing a budget based on an expected income of 1.235 trillion naira for 2026 fiscal year. And we expect that this amount will be sourced from the following. We expect that there will be 4% free on board FOB in 2026, which is projected to be 949.86 billion naira. We expect that there will be 2% VAT share to NCS, which is projected to be 55.47 billion. We expect funds for ongoing capital projects to be at 230.04 billion. So, which brings our total expected funding to the tune of 1.235 trillion naira. This particular amount is expected to be expended under the following heads: personnel costs, 421.7 billion, representing 32.55%. Overhead costs, 307.77 billion, representing 23.76%. Capital costs, 565.93 billion, representing 56.99%, making a total of 1.295 trillion naira. Let me just proceed as I close to mention some major highlights of the budget expenditure. The first to note is the personnel cost. Our nominal roll shows 15,569 personnel, but before the end of the year, we are expecting to get on board 3,927 more recruits into the system. And so the personnel cost is a little bit high at 421.7 billion. And this is the breakdown of the personnel costs. For salaries, allowances of these officers, we are projecting 355.39 billion. For provisions of employers' contributions under the National Pension Scheme, we are projecting 15.16 billion. For 5.25% employers' contribution to National Health Insurance Scheme, NHIS, we are projecting 15.16 billion. For payment of annual group life and backlog insurance, we're projecting 13.23 billion. And for meeting our obligations of statutory payments to NSITF and ITF for 2026, we're projecting 6.6 billion naira. For overhead costs, the estimate we have is 307.77 billion. And this is meant for day-to-day administrative expenses of the service. And the details are as spelled out, 20 billion for staff loans and advances, 8.6 billion for general maintenance of buildings, plants, and generators, 6 billion for utilities and supplies, 24 billion for travels and transport general, 7.72 billion for fueling of vehicles, plants, and generators, and aircrafts and boats, 8 billion for training and retraining of our officers. We are undergoing a transition period, so we need to train all of our younger officers who will be stepping into the shoes when we leave the service. 210.64 billion for financial and miscellaneous services, and 6.32 billion for consulting professionals and other services. And that is for personnel. For capital expenditure, the total, as pointed out earlier, is 681.69 billion, and the details are 74.31 billion for proposed works, that is the new ones, 33.57 for proposed supplies, 407.87 to maintain and complete ongoing and existing projects, 164.7 billion to complete ongoing supplies, and 1.23 billion for liabilities. The details of the breakdown of the expenditures of personnel, overhead, and capitals are attached as appendices 1, 2, and 3 of the main reports, which were also submitted earlier. Finally, I want to once again appreciate the support, and I assure you that at all times we will continue to submit ourselves to your guidance and to your direction, as I pray that this Senate committee considers and approves the 2026 proposed budget of the Nigeria Customs Service. Thank you, sir.
Thank you, my chairman.
Thank you, Mr. Chairman, distinguished colleagues. Our guest, my name is Senator.
Mr. Chairman, okay.
Distinguished colleagues, my name is Senator Naira Imason, representing Edo South Senatorial District. Thank you.
Thank you, Mr. Chairman.
I can only ask you in relation to what I have met. I cannot ask you in relation to what I have not met. So what I have met that I'm interested to ask question is on page 11 of your presentation. I'm not good in Roman numbers. V and II is number what? 7. So number 7, you said 2.64 billion naira is set aside for financial and miscellaneous service. This description is, huh? Oh, so it's 210 billion. You know, that's why I said I'm not good in numbers. Financial and miscellaneous services. What does that exactly connote? Thank you.
You have done half year. I would like to know from you, from what you have done, where are you in this revenue target? We projected 11 trillion for 2026, and now we are starting the second half of 2026. Is your projection still in line with your target? We've done a half-year mark. Are you sure you're going to still make 11 trillion by the end of the year? Then secondly, the Senate whip has pointed out the whopping sum of 210 billion naira in miscellaneous expenses, miscellaneous, page 11, 210.64 billion is set aside for financial and miscellaneous services. 210 billion naira is no longer small money, even though you collect trillions in revenue. But one would have expected that these miscellaneous expenses should have been captured in the budget, what constitutes these miscellaneous expenses, because it's 210 billion. If it's like 5 billion, one may understand. But 210 billion naira expenses you intend to incur in 2026 will be so large that you should have been able to capture what they are and put out down for us to see in the budget. So this is my question for now.
Okay. Expected income is 1.235 trillion. Is that also? Income. And utilization is 1.295 trillion. There's 60 billion difference. There is utilized over what income. We want to know why this deficit is coming from over 60. No, you explain to us. Boss, as it is now.
Sigi, just note the questions.
Just take
you
the question.
address them one after the other.
As it is now,
yeah,
it's showing deficit. As an accountant, there's deficit. There's difference between what you expect and what you spend. So that is the second issue. The third issue is on the loans, staff loans of 20 billion. My thinking is that when they say staff loans, should be a revolving fund, since there is recovery. How much was recovered previously from these staff loans to warrant us estimate a whooping 20 billion additional for staff loans? Because there must be recovery of staff loans, since it's not a grant. So we want to know how much was recovered previously from staff loans that were issued before now. Then how do you justify the addition of 20 billion? Thank you.
Of the previous financial year, and it's quite fitting that he is in respect of the Africa Free Continental Trade Agreement and the equal currency. I attended the function. Your officers were there, very highly, very senior officers actually, to deal with discuss issues of the equal currency. I haven't gotten the customs perspective at that function in NILS here, one of the institutions under the National Assembly. So I want to know, how prepared are you as an institution in addressing and preparing Nigeria for the Africa Free Continental Trade Agreement Treaty, and also the possibility of the introduction of the equal currency? Thank you.
Take you to your revenue performance. Despite what you have posted, a lot of Nigerians still believe that there's so much to be done in the area of revenue performance and collection. So if I ask you to rate yourself, how would you, in one sentence, rate yourself? Is it Uhuru? Have we gotten to where we need to get to? And how have you been able to deal with revenue leakages? Revenue leakages. Then I'll take you again to page 11, the same page 11, and I want to, for record purposes, add my voice to the concern raised on the 210, because it is of so much concern to us, because in budgetary, when you have so much money kept in miscellaneous, then there's cause for concern. And you will also have to address that. And we don't have a breakdown. I don't know if we'll have it in the bigger manuscript, if the breakdown is there. I'm also concerned about how you're going to spend 24 billion for the travels and transport. I'm also wondering the experts, professionals, and consultants you intend to bring in that will explain this 6.32 billion you have here. So page 11, we need to do a lot of explanation here because you seem to be a very big spender. So we need to know how you want to spend taxpayers' money. Thank you.
Clarification, yes. Mine just a little clarification. You said on page 2 that your service collected 7.277 trillion. And you went on to say that, but for, on page 4, but for the account total, for the total revenue considered within that year, which you said would have given you 34.538 trillion. Is that correct? Page 4, page 2 and page 4. Page 2 says that total revenue collected is 7.27. Again, like I said, it's clarification, just clarify to me. And that because of the concession within that year, namely 3.8 IDC and other items, which amounted to 34.538 trillion, that you would have collected had this concession not taken place. If that is correct, it means then, therefore, that what you would have collected within that year will have amounted to about 41 trillion. If that is correct, then I'm looking at your projection, which is far below that amount. And in 2026 going forward, because this is 2025, are you expected to now recover that 34 trillion, which will now boost your collection to 41.625 trillion? Just clarification for me. Thank you.
So if it is too hot, let them go.
No, the environment is hot now that you have asked your question. It's all right. Okay, CG, over to you. CG, questions, please address them as such. So you don't have to take it one after the other. So please, let's have your response. And I know that your lieutenants are here. Where you want any of your lieutenants to come in with specifics, you are allowed to do so. Thank you very much.
Always enjoyed very, very warm reception. That's not tax with one hand, they are removing tariff on vehicles with the other hand. So they are not absolute. We have to live with all of those things because tariff measures, tariff policies are meant to achieve certain economic objectives by government. They are never absolute. They are not necessarily meant for collection of revenue or improvement in the revenue. I just needed to answer the last part, if you permit me, because it is very important. It is the issue of the implementation of African continental free trade. Because we believe it is very important that the sad story of very low rate intra-trade between African countries is something that should be getting our attention. We are actively engaged with the Secretariat of the African Free Trade area and the Afrexim Bank. Afrexim Bank is coming up with solutions, payment solutions, for example, so that exporters in Kenya would not have any problem paying for imports from Nigeria and vice versa. So the payment system, there are a number of initiatives. Customs is also creating platform to engage directly with the private sector in Africa through the CPAT program. Afrexim Bank is promoting joint border, one border system in all our major borders. And the next 1 week, we are going to be engaging our colleagues in Zimbabwe to see how the joint border between Zimbabwe and South Africa works, so that we can replicate it in places like Seme and Mfum border. So we are all... Okay, sir. So these are some of the things that we are doing to ensure that we grow the momentum of African trade, so that at least we can progress from 1 digit to single digit in the next 2 to 3 years. Thank you. Thank you very much.
In first of all, congratulating you on the recent extension by Mr. President. And we thank Mr. President for rewarding your hard work.
The incoming governor of Oyo State. Please.
So shall it be by the grace of God.
Inshallah.
I also want to commend you for the performance of the customs and to urge you to please do more. We know you have told us of the factors that are mitigating or militating against your meeting your deadline, but I'm sure by the grace of God, just like we did last year, you will surpass the targets. We want to urge you, and we commend you and commend your team that you should please do more. But there's one thing that I want to talk about, I must just mention, is the issue with the Bodija market people in Ibadan that is in court. Last year we raised it here, and I believe is that why don't the matter get settled out of court as advice so that it will be laid to rest. That's just my own. I thank you very much for your presentation.
The Vice Chairman, very distinguished colleagues, I want to thank you very much. The CG, I'm sure that the members are very well pleased with the responses that you gave to the issues raised. I want to thank you very much and thank members of your management team for giving you the necessary support to achieve what you have achieved to date. I want to implore you to work harder to ensure that you actualize the projected revenue figures for 2026. On that note, may I now put this to prayers. May I now put up the following prayers. That the members approve the revenue target of 11.074 trillion for 2026. Those who are in support say aye. Aye. Those who are against say nay. They are not here. Okay, now to the expenditure. Will the members here present approve the expenditure of 1.235 trillion for the year 2026 fiscal year? Those who are in support, can you say please aye? Aye. Those against say nay. They are not here too. Thank you very much. Okay, you want me to put it on? Oh, okay, to hear me well. Okay, may I now employ the members of the press to excuse us for some time? We will see you, and we will see you very well. Is that okay?